all right, using a 15-minute chart, bounce at an internal level 1. The stop is fixed, 2,700. We want our trades as of now to be especially the ones that will make us money. We don't want to trade all the issues. We want to select these are actually moving right now, place specific size in them percentage wise. Yield will be known towards the end of the week, and take out, of course, that yield. Now, the advantage of using this intraday is that we could probably get a wave 5 and then we have another head and the market moves higher to probably 3,500 and 3,600 levels. So we're being very efficient in this case and making the most of the market's volatility. It is possible, of course, with the current momentum plots that the market doesn't really do another head, just does a shoulder and moves on higher. All right, let's take a look at the longer term position trade that you may wish to make. Now, we were just saying that the market could do another shoulder. So if this is a wave 5, this could be a degree 4, will test level 1. So it is the same entry, but your stops have to be below level 1. Just in case you get to test that level 1 one more time before you move higher, your stop becomes below level 1, which is 2,500. And so the risk is higher. You're using here a stop in this risk matrix, 2,500. The entry is still the same, 3,000, and this will relate. Suppose, let's say I'm a very aggressive trader, I'm going to be taking target at 3,850, end of the month, wherever that is. At the breakout high, it would yield around $900. The risk, because I'm having a stop below level 1, 2,500, I'm entering 3,000, is $500. Over here showing $450 for one coin. So it's probably a 1 to 2 risk reward, close to that. Now, if I'm a conservative, I will only use 0.6 of a coin. Reward becomes 540. The risk is around 270. If I am just starting or cautious, I would just use 0.35 of a coin. Risk becomes minus 160. Reward becomes 315. The advantage of using a fixed stop, all right, really here below level 1, or even on our previous example, is that in most highest probability we are guaranteed to be in the right direction of the weekly swing. Weekly swing meaning that this should be seeing these levels, or the monthly swing, before it reverts and breaks below our stop. So we will have already done the trade swing wise, direction wise, taken profit before we see the stop. We do not have to monitor really. We don't have to look in on the trade. We don't have to be also, let us say, uncomfortable holding throughout the month, because of course it's still 2 weeks to the end of the month and it's still a long duration. Of course, we are all anxious. There will be a lot of anxiety, and therefore by having a stop below level 1, we are almost guaranteed that the cycle will be completed to the earliest level possible, as shown on the weekly chart, and that will get at least a good portion of our profits, even if you don't hit that target by the end of the month, before there's any reversal to take us out. So it's a more comfortable way to trade and more assured, seriously, to actually yield good results. Usually there is a motto that goes that if you take emotions out of the trade, your trading gets much better. So if you are observing an efficient way to run the trades, emotions are really out. All right, let's take a look at the entries themselves. So this is now that 1 hour chart. We're having breakout at this point. You can see we're having an internal 1-2 here. This shows, of course, more strongly on the 15-minute chart. You will only note that we also only show risk management tables for trades that are opportunities and that are timed at the right moment. So yesterday we were showing trade management or trade risk matrices for euro, or for the Ethereum against the United States dollar and Bitcoin, because the breakout point was expected to be right then, yesterday, and the trade would actually take as little time as possible to reach target and get us into the money. Usually all other issues that are not going to break out or are not going to actually be doing any good profits, we would consider not to show risk matrix on them because they're not an opportunity. So you don't want to be bogged down in this trade. So for instance, today we're showing a trade with the United States dollar against the Swiss. That is again an opportunity. All right, and so on. You only get, and of course oil, we would always show risk matrices there. Whenever a trade is ripe to do a good swing, we're now dedicated to have this kind of seriously this kind of risk matrices, so that we're focused on exactly what we want to do and stand out of all the noise or all the other internal very small short-term swings that will just crowd our account and not really show the desirable results or any meaningful results. All right, so we're doing that now 15-minute chart. Okay, usually if this is an AB or a C, it's going to be doing, actually if it is a degree 5, it's going to be doing 2 good swings, a 3 and a 5. If it is even a C, it is also going to be doing 2 swings. All right, so we are quite assured that hopefully, that is, if we are observing that this is the bounce point, or that this is the point of origin of growth here. This is video 1 and 2. There is a neckline right here. So let's just assume it's a forward market. It's a 5-wave swing. Now, right now, we would expect that the best entry is just going to be 50%, 3024, 3050, 3087. Of course, is too. Let's just go for 3050 or 3000. You're looking at 50%, of course, and 38.2. So 3050 is actually 61.8%. 3000 is exactly 38.2. So I would divide my entries: 1/3 at 3050, 1/3 at 3025, 1/3 at 2998 or 3000. Remember, the stop gets fixed at 2700. Now this will average entry wise at 3025. Even if it doesn't all get filled as the market moves higher, I keep adding my last 1/3 if it did not get filled. Depends after this if you're going to be intra-week trader or intra-month trader. Today especially, we expect a bit of a deeper retraction because we are at a neckline. So probably this looks like wave 3. There's going to be a 4, and then there's going to be a 5. So if you have a deeper correction, you would consider that this is a 4 and that you can actually become an intramonth trader and hold this all the way to 3700. If you don't have a deep retraction, then of course this is still wave 3, extending, and you want to get in and you want to take profit at 3400. Looks for, from this perspective, we're going to take out 3293 before we do any support into the shoulders. So you want to get in and take it to 2300 at least, and 2400, meaning it's going to extend. That's what we're looking at from what we could decipher from the current momentum picture. So these are different fibs that we usually have on the hourly. They would of course give us more or less very close to the same entries.